What's up, guys? DK here. Today, I wanted to do a trade review on the trade that I took on GBP USD during the New York session, and I'm gonna go over my trade setup, my reasoning, what went wrong, what went right as well. So, without any further ado, let's head over to my setup and show you what I did today. Alright, guys, heading over to my desktop. This is the trade that we took today, or that I took today, and basically the bias, the daily bias was bullish, and obviously I saw a counterpart to that, obviously thinking that the narrative for the day would shift to be bearish for the rest of the trading session of the New York session, down from 7 to 11 on New York time. So looking at this trade, we can see that the market made a market structure shift on this point that made it go below the 0.5 level. So this fair value gap here was immediately considered as an inverse fair value gap the moment that the market traded below the 0.5 level. So from there, I took that PD array, also mixed it with the order block that I saw from this trade setup. There was a fair value gap and order block above. Decided to use the order block instead and enter the trade right around this white line, right? That's why I took the trade, and then obviously dipped lower. Now, one thing that I want to share is that I had a partial take profit right around the 1-to-1 risk reward, and the reason why I place my first take profit right around the 1-to-1 risk reward is that the moment that the market breaks below this take profit partial, that the trade won't affect your account as much, because even if the market trades below this first take profit partial and then goes back up again, it'll be 0-0. It's your account will still be as it is with no effect whatsoever. And also what that does is to lift off some weight off your shoulders. As the market continues to move, you may feel some emotional restraints towards your trade, or thinking that the trade might go otherwise or might go the other side. It's basically a win-win, right? You'll never lose. Just put your first take profit here as a 1-to-1 and you will never regret it. So looking here, market obviously went down, didn't go past this sell side liquidity yet, but just tapped it just a bit, and then went back up into this fair value gap and a bit into this huge order block, and then started to price lower, right? And obviously dipped into our take profit, and that's where we won for the day. And the reason why I wanted to make this my point of interest is that usually you'd see that the markets trade below this low, and then when it gets to this point, it would obviously start to price higher. And now I've seen it happen many times, so that's why I decided to put it as a point of interest. So if the market dips into here and starts to consolidate around this area, probably from this point to this point, starts to consolidate there, that I would highly anticipate a market structure shift to go bullish and potentially take out this equal highs that are up here, right? So gotta take your precautions, and if that did happen with that consolidation, which means my stop loss would immediately be moved to this high right here. So with that in mind, my stop losses, obviously, as the price went on lower, first I placed my stop loss here. I'll show you in a picture in a bit. Place my stop loss here, and then later on place it here. Later on will be placed there until it hit my take profit. But that is it for the trade setup. And as you can see with my other analysis that I had, didn't want to share it because I didn't want to make this long and laborious for you guys, but that's basically it. I anticipated that the market would trade below this 0.5 level that I marked on the hourly time frame. Remember, this is GBP USD. You guys can take a look at it for yourself. As 0.5 level with a fair value gap, which you would see on the hourly time frame. Honestly thought that it would dip below and also dip into this fair value gap that would also see on the hourly time frame and then retrace higher, but obviously it didn't do that. Just dipped into this fair value gap with about 2 pips, 3 pips, and then started to move higher. And with the move higher, there wasn't much to take. If I did enter this trade, or if I did participate in this price move, which means I would enter around this point, same time break above here, I would be looking for entries where the market dips into the fair value gaps and starts to go upwards. So I'd enter here, it move up, or same time it breaks above this highs, that's what I'd enter, or it goes back above, that's what I'd enter in this fair value gap, goes back above again, I would enter here into the fair value gap, shoots above without any opportunities to get in, I would also honestly enter there, but to a point where I would not expect the market to come back below, of course, but obviously it comes with precautions. As I taught, you enter the trade here, you place a stop loss right around below the low of your fair value gap of where you place that trade. Let's say you entered around this point, your stop loss would be here, the equivalent would be somewhere around here, and then that's one out. And then afterwards, after price retraces here, you would expect, or you would anticipate that price would come back above. That's where you're gonna take your take profit there, and then it's gonna go above. Then yeah, that'll be it for the day. You wouldn't lose anything here. You'd literally not lose anything if you understand the strategy of using partials in your trades. And then at the end of the day, moves lower, then gets out of the New York session. That's the trade I took for today. Talk to you guys on the next one.